I wasn't going to do a show today, but this is the first real correction in about 6 months. This is the first real corrections we've had in about 6 months. Now, you wouldn't say it if you were looking at Bitcoin. If you're looking at Bitcoin, Bitcoin is pretty much down. Let's have a look at it here. It's down from the top to where we're at now, about 12%. But if you look at the altcoins, that's where the real fear and the real bloodbath is happening. And I think everybody's asking, well, first of all, have we reached the bottom of this correction? Because we have had a quick bounce in Bitcoin. You can see that we're back now at 95.1, and that's off a low of 92.1. So we have had a bit of a bounce in Bitcoin, and now everyone's going, well, is this the end of the correction? Is this correction over? Is it time to actually start deploying cash? Are we going to continue with the bull market, or is there another leg down, or is the worst actually yet to come? I'm going to go through all of those things. You want to stay tuned until the end, because it may not be as pretty as it looks out there, and that's what I want to show you guys. Let's do this. As I said, I wasn't going to do a live show today because, it's Fridays. Fridays, we normally do a Friday banter. I actually recorded an amazing Friday banter for you yesterday. But on a day like this, I need to come and we need to make sense of what's happening in this correction, because it does feel like it's the first real correction of the bull market. In fact, if you want to look at the last real correction that we had in this bull market, it was probably this correction over here, which was exactly on the 30th of July, where Bitcoin went down about 29%. So I'm going to show you why I think that was really the last real correction that we've had. And now we haven't had a correction since then. So we haven't had a correction for about 143 days. And it looks like we're probably experiencing the first correction of the bull market, of this post-election bull market, so to speak. I'm going to show you why I think it's the first real correction. And we should probably talk about whether this correction is over or whether it's going to get a lot worse. And there is a probability that it's going to get a lot worse. I'm going to show you all the different factors, all the different data points. We're going to understand a whole lot of corrections. And then we're going to go through the altcoins, because a lot of altcoins look cheap, but it's only cheap if it's going to go up from here. Otherwise, it could actually be pretty expensive. So listen, I wasn't going to do the show. What you need to do is you need to smash the like button in appreciation for me actually doing this. I should be on vacation today. In fact, this was supposed to be my last official working day at the office. If you're not already subscribed, this is your last chance to subscribe in 2024. The next time you'll have an opportunity to subscribe is 2025. So smash the like button. Let's get everybody here. Let's get everybody watching. We will drop the Friday banter, what was supposed to be the Friday banter. We'll drop that for you tomorrow. It's a very, very, very good show. And then Sunday, I'm going to do a show which is going to talk about my predictions for 2025. You don't want to miss that show, because that's really going to allow you to set your portfolios up for 2025. So with that in mind, let's get going. Let's not waste too much time. Let's get going. Let's talk about this correction. As I said, the real correction actually isn't on Bitcoin. If you look at Bitcoin, you could be forgiven for saying that, in fact, if you look at the fear and greed, just look at the fear and greed. The Bitcoin fear and greed is 74. But I know that if you think about how everybody's feeling right now, I know you're not feeling greedy at the moment. I know that everybody is feeling fearful. And the reason is that if you read here, this is the Bitcoin fear and greed. It's not fear and greed. It's not crypto fear and greed. It's Bitcoin fear and greed. And if you look at Bitcoin, it's not really a crazy correction. In fact, if I look at Bitcoin, we are down at the bottom, we were down 15%, but we're now down about 12.36%. But actually, more interestingly, we are only at a point that we were at a month ago. So we've rewinded 1 month, right? We have rewinded 1 month in this thing. So the correction is not really an altcoin correction. The reason why I say it's the first real correction is a Bitcoin correction. The reason why I say it's the first real correction is because when you look at altcoins, this is the picture on altcoins. And you can see some of the altcoins are really, really, really getting smacked right now. Not only that, the sentiment when it comes to altcoin investing is fearful. When you're in Twitter, when you're in your circles, even walking around the office today, there's just a different tone. It's the first correction that we've had in, as I said, 140 days, where the fear and greed, you can actually feel a lot more, that people are a lot more fearful. Now, what you'll remember is that when you look at corrections come when people least expect them to come, right? So corrections come when they least expect them to come, and because of that, they catch people off guard. And generally what corrections do is they change the framework of the market from greed to fear. That is what a correction actually is. A correction is not necessarily a price correction. It's a correction of sentiment in the market. And if you look at the sentiment in the market, specifically in the altcoin market, let's put Bitcoin aside just for 1 second, but look at ETH. ETH from top to bottom was down about 25%. Now, that is a very, very, very respectable correction in a bull market for ETH, 25% on the way down. If you look at SOL, so SOL was down 33.7%. That is a very, very, very respectable correction for SOL. Then you got Popcat. And the reason why I want to show you Popcat is because I want to show you the amount of pain that meme coin traders took. So Popcat was down 70% from the top, or from when I told you guys that you should probably start selling Popcat. So these corrections, the real correction is actually happening in altcoins. And it's the first time that I've actually seen fear in the altcoin market. As I said, on the Bitcoin market, there's not much fear. I mean, it feels like 74, maybe it'll go down to 72. We will talk about fear and greed in a couple of seconds, but it's not a big correction. Where the correction is in alts. And as I said, what corrections are designed to do? They are designed to take the market and to change the market sentiment from extreme greed to extreme fear. And that is what we're kind of going through now on the altcoins. And as I also said, corrections usually come when people least expect them. Now, the truth is, we have been expecting the correction. In fact, for weeks, I've been telling you to try and build your stockpile of cash. I had about 20% in cash. As you know, I did deploy some of the cash. Now, in hindsight, I would have loved to have that cash bag, but I'm obviously human, so I did deploy some cash, which I probably shouldn't have deployed. But this is why I told you to start keeping 15 or 30% in cash, because what you can see is that the cash that you've got now can yield you amazing returns. So that is why I kept saying to you guys that I'm expecting the correction. Have 30% in cash when it actually happens. And for those of you who've got it, I'm going to show you in a few minutes exactly what to be doing with that cash. So, I mean, we have had a bounce. And a lot of people are thinking that maybe this bounce can actually be the end of the correction. And I think we should maybe look at it just for a second. What caused the bounce was this. If you remember, the thing that kicked off this correction was when Powell spoke, and he had inflation fears, right? And those inflation fears that Powell had basically gave the market fears around not being able to decrease rates as much as possible. But now we've had the PCE. Now remember, the PCE is the personal consumption expenditure, which is the actual measure of employment that the Fed actually use, right? And if you look at the PCE is actually lower than expected. So they were expecting 2.5%, they got 2.4%. So now that's why the market actually rebounded. So the market actually rebounded because it saw this and it said, hold on a second, this whole thing started because Powell was scared of inflation. But if you look at what the inflation measures are actually doing, well, hold on a second. The inflation is actually not as scary as it is. And that's why we've actually had a market recovery. And that is one of the things that shows me that maybe we've reached the bottom of this correction. But I don't want to say that too far because, as I said, there's fear in the market. And I want to analyze what these corrections are about. And I want to analyze how long they normally last. And I want to come out after looking at the data to decide whether or not this correction is actually over and what we should be doing. So as I said, there is fear in the market, and you can see fear in the market in many places. The first place that you can see fear is that yesterday we actually had the biggest outflow in the ETFs that I've seen in a long time. $671 million actually flowed out of the ETF. That shows you that the ETF buyers, the TradFi markets, they are actually fearful. Same thing for ETH. ETH had its first outflow day. It's tiny outflows, but still only $60 million of outflow. I think that was actually Josh withdrawing his ETH from the ETF. Was that you, Josh? It was you. I thought that was Josh. So you can see that this outflow over here was tiny, but still it was the first day of outflows that happened for a long time. So what does that tell us? It tells us that Wall Street is actually fearful. Another place that shows us that Wall Street was actually fearful is look how they sold down MicroStrategy. MicroStrategy was at a high of $543. MicroStrategy's gone down 40%. That shows me that Wall Street is actually fearful right now, right? Then you've got Coinbase. And Coinbase, we had huge selling on Coinbase. Now, again, this is Americans selling on spot. And you can see that on spot yesterday, the spot sellers were actually getting quite scared. Another metric that shows me that there was fear in the market. Look at what happened to Bitcoin dominance. It shot up to almost 60%. It's come down now to 59%. But when people are fearful, they go into Bitcoin over altcoins. Now, a lot of the other dips that we've had didn't shake people and didn't shake the Bitcoin dominance. This dip actually shook the Bitcoin dominance, and yesterday we were spiking to 60% on the Bitcoin dominance. That shows me that people are scared. More signs that people are scared. Look how people are selling off quality altcoins. Sol went down 33%. More signs that people are scared. WIF down almost 70%. When people get scared, the first thing they're going to go and do is they're going to go and sell the things that they don't think have fundamental value. And that's exactly what they did. They went out of meme coins. Now, what you can see about this recovery, interestingly enough, is if you look at the 1 hour and you look at the things that are actually recovering other than Fiatcoin, it's actually not the meme coins. And if you look at any other correction that we've had in the last couple of months, every time the market has recovered, the meme coins have been the ones to recover it. Where are the meme coins here except for Fiatcoin? Where are the meme coins? The meme coins are nowhere. What this market is telling you is that people are a little bit more cautious. People are saying, we're ready to buy, but we're going to buy into quality. We're not buying into the meme coins yet because we don't have the confidence that this correction is actually finished. I think that this tweet over here did a lot to actually save us from a much, much, much bigger dip, because this was the cause of the problem. And now the cause of the problem has been clarified or has been removed. And so I think this has done this. But I do think that we need to understand exactly what's happening in the market, and we have to understand the fear in the market. So let's carry on looking at the fear in the market. We had a whole lot of liquidations. The people who should be most fearful are the people with leverage. Okay? Taking leverage in this market is great, but you need to know what you're doing, and you need to make sure that your liquidation zones are not very far from the from the numbers. Because when ETH goes down 30%, I don't care who you are. I mean, I want to just quickly show you one position over here. Remember this ETH position, which was $2 million in profit. Remember that ETH position? It was $2.4 million in profit. This morning, this ETH position was actually at a loss. And that is how quickly the market can actually turn when you're trading with leverage. So you need to know exactly what you're doing if you're trading with leverage. Because right now, what the market is doing is the market is flashing out different types of leverage. The first leverage that it's flashing out is it's flashing out the leverage on the exchanges, on the perpetuals exchanges. That is traditional leverage. So the traditional leverage is actually being wiped out. If you want to see let me show you a quick image of how much. I think about 1/3 of the total leverage in the market has actually been wiped out. So we were at about 90 million. We're now at 69. We were at 69. So almost 1/3 of the total leverage actually got wiped out. So that's the first kind of leverage that is getting wiped out. The second kind of leverage which is getting wiped out is actually the leverage in the market which is not displayed on the perpetuals exchanges. And that is the meme coin leverage, right? Because if you think about what meme coins are, meme coins fundamentally are leverage bets against the markets. When the market goes up sustainably, meme coins go up a lot more. When the markets go down, meme coins go down a lot more. So meme coins are actually leverage on the market. And the market is now starting to flush out the meme coin leverage. That meme coin leverage is now gone. In fact, when I look at the on-chain leverage or the exchange leverage, we got to a point last night where there was actually nobody left to liquidate for a long time. That's how badly this liquidation cascade that happened last night. Then after that, we moved to liquidations on-chain. Now, when I say liquidations on-chain, it's people forced to sell their coins because they get scared or because they got bills to pay or they just can't handle the pain anymore. And what you can see yesterday is that we're not at the highest point we're back to September, and there was a big one in August and there was a big one in July. So we haven't really started liquidating people on-chain properly. So only the first two leverage flashes have happened. The first leverage flash that happened was the normal leverage, which happened on the leverage exchanges. The second leverage flash that happened was the meme coins. The third one, which is actually the leverage of getting out people who are overexposed to this market, but overexposed on spot, that hasn't happened yet. So those guys aren't out the market. This indicator here tells you that this dip could actually continue for a little bit longer. But as I say, we could have been saved by the inflation news. Otherwise, I think this dip could have continued for a little bit longer. Let's look at some other indicators to show us how long these dips could last and whether these dips whether this dip is nearly over. So let's look at previous corrections. This is 2017, and you can see that with 2017, Bitcoin went down 32, 35. We had 6 corrections. And 3 came before the break of the all-time high, and 3 came after the break of the all-time high. When we look at the 3 that came before the all-time high, they were all over 30%. And when we look at the next 3, they were all over 30%. So that was 2017. 2021, you can see that the corrections became a little bit more gentle, right? 15, 21, 17. We had a big one of 31, but the majority of them were actually a little bit more gentle. So what we can say from this pattern over here is we can say, look, if the first couple of corrections were 30 to 38%, and the second couple of corrections were 31%, 15 to 31%, we can say that a fair correction on Bitcoin in this cycle is somewhere around 20%, right? We can say because there's more money in the market's more mature, and there's more buyers and everything like that. I think what we can say is that the average correction, unless of course there's some black swan, unless of course there's something that happens in the Dow Jones, and by the way, there's nothing really happening in the Dow Jones. It's had a very orderly and healthy correction. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. In 13 days, the Dow Jones lost about 7%, 6%. It's having a very healthy correction, right? So we can say that from this indicator, we can kind of say, look, a 20% correction on Bitcoin actually seems like that could be a cycle correction, right? And if we look at the correction that actually happened on Bitcoin, from that indicator, we can say, look, we actually weren't that far. Maybe there's another 5% down to go. And if there is another 5% down to go, then we kind of looking at the different levels. And we're saying, okay, well, if it goes down another 5% to give us 20%, that would take us back to 87, which does correspond to this level here on the charts. That could actually happen. So that indicator is telling us that maybe there could be 5% more to go down in this correction if you look at it in that indicator, right? We also look at another indicator, and we need to look at specifically, let's see if we've got ETH. I think I had ETH. So let's look at ETH. In 2021, if I look at the corrections on ETH, they were anywhere between, let's just look at the beginning part, anywhere between 20 and 30 and 37%. So we can say in 2021, the average ETH correction or a bad ETH correction would have been around 30%. Now let's go back to the ETH chart and let's just look at how far ETH actually went down. And you can see that ETH went down from top to bottom about 25%, which says that if this is going to be a brutal correction, we could probably go down all the way back down to about 2.9. But ETH held a very strong level here. It held the 3,100 level, which has been a level that ETH has held for quite a while. So from that point of view, it looks like max can go much more, but expected bad case probability, another 5% down if we're going to carry on going. Then let's look at the time frame of the actual dips, because I think this is a big thing that we need to look at. We need to understand the structure of dips in a bull market. In a bull market, one of the characteristics of a bull market is that the coins crash and recover very quickly because people are by nature bullish, and generally the sentiment is very bullish, and you can feel that now wherever you go. And so generally these corrections don't last a long time. I want to show you a few examples. So let's look at 2016 and 2017. If we analyze the corrections, this one took 6 days to get the local bottom. It went down 35%. So they go down quickly and then they recover pretty quickly. It took 42 days to recover, but then this one took 15 days to get to the local bottom, and it took 32 days to recover. And recover means to get back to the previous level. So in this case, for Bitcoin to get back to 108,000. This one over here, 34 days to get the local bottom and 54 days to get back to the same price. So these dips on average took, you could say, 2 weeks. But look what happens later in the cycle. In the cycle, it takes less and less time because the moves are starting to be much more aggressive, right? So here you had a 15-day and a 34-day, but here you had a 13-day and a 4-day. Now let's look at 2021. Again, in the beginning of the cycle, the dips take longer, 26 days, 22 days. As you go further up in the cycle, starts being much more aggressive. So 3 days to get to the bottom, 14 days to get to the bottom, 6 days to get to the bottom. Now again, compare that to 57 days to get to the previous price, 55 days, 7 days, 31 days, 23 days to get to the price. So what is this telling us? This is telling us that I think we're pretty late in the cycle. I think we're probably somewhere between here we're around here, because if you look at where we were, we're pretty much exactly the same as we were here. And so we're pretty much later in the cycle, which means that in general, that you've got between 3 and 14 days from top to bottom. Where are we now? How long have we been in this correction for? Well, you can say 1, 2, 3. We're in the third day at the moment. So if I were to look at the time-based indicator, then I would say, okay, probably we've got another 2-3 days of this. If that, it could be, let me just go back to the chart. It could be, here it is. It could be another one of these 3-day ones, which, by the way, if you look at the December 2021, it was 3 days from top to bottom, and then we carried on quite aggressively up. But in the worst case, 2 weeks, another 10 days of this. I don't think it's going to be another 2 weeks of this. So I think that you can kind of say that you need to be able to survive this for another 5 days max, but maybe it's going to recover already, because maybe we're already in day 3 and we're copying the 2021 pattern. In fact, let's go look at the 2021 correction, because that 2021 correction is very, very, very similar. Last bull run Christmas sell-off, 29% correction, followed by a giga pump. So let's quickly go back and look at what happened in 2021. Again, let's just quickly go here. I want to stay on the daily, because I think it's important to stay on the daily. Here we go. Let's just move that to there. If you're here, guys, just obliterate that like button. We need to get more people here. They all think we're doing a Friday banter today, and we're not doing a Friday banter today. So this is the December correction in 2021. And let's take the top all the way to the bottom over here. So the correction was about 17%, lasted about 11 days, top to bottom. Okay, so from the top of Bitcoin's correction to the bottom of Bitcoin correction, we had about 11 days. So you can see it over here. That's the top. There we go. And let's just take it all the way down to the bottom over here. And it lasted about 11 days. And actually, let's be a little bit more scientific here. Let us take the ruler over here and put it there and take it to there. So that was the correction. Was about a 12% correction. Took about 11 days to actually do this. And then it was followed by a giga pump, which actually started somewhere around here. And it carried on going for, and that was like probably one of the last big corrections of the cycle. That happened pretty much the same time, I mean, give or take a week, pretty much happened the same time in 2021. So again, pretty much repeating the 2021 patterns. Everything here is repeating exactly the 2021 patterns. Nothing to be alarmed about. Here in 2021, okay, they say minus 30%. I don't think it was 30%. And in the same period now, okay, sorry, this is altcoins. So if you look at crypto total market cap, which is the top crypto market cap excluding the top 10 coins, which would be others, I think. Yeah, it would be others. So let's quickly just open up a chart of others. Hold on, let's quickly open a chart of others. And let's go to others in 2021. And you'll see now. We're just going to go back. Okay, so 2021, May, so we want to go to December 2020, which is here. And you want to say, from when did this correction actually start? You can say the correction started at the top over here, and it went down about 31%. And actually, it lasted about 5 or 6 days from top to bottom, somewhere around there. Now, where are we today? I think we're about 31% down on others. Let's quickly go to others. I'm trying to scroll here with a very funny mouse, but let's try and get there. Actually, probably better to just redo the chart. Okay, so where are we now? We are from the top of others. Is this others or BTC? This is BTC. Let's quickly go down to others. Here it is. Okay, so from the top of others, here, we have been going for one. Let's actually see how long. Our correction was 35.4%, which is more brutal than 2021, as you can see. And it lasted about 13 days. So that is, I think from that point of view, this is telling you that this correction is enough pain, so to speak, enough pain based on that. All right, I want to go on to one other measure. So we've looked at Bitcoin, we've looked at ETH, we've looked at timings, we've looked at timings. Now I want to go on to another measure. I want to just read this to you from 𝗙𝗢𝗕𝗓𝗔𝗕𝗟𝗓, because I actually think that this tweet actually resonated. It says, we've been through comparisons to 2023, which unfortunately broke structure, but diversions we have now and the region of interest, 85 lows, are similar to the sell-off back in January 2024. The sell-off was 21% last time from the high, exactly the same distance from our recent high to 85K. And remember what I said to you earlier, is that if we went down another 5K, we would probably get to that 85 or 5%. We'd probably get that 85 or 90% level. That is pretty much what this structure is saying. So from a structural point of view, and he's talking about the bearish divergence here on the RSI, he's saying that could take us down back to the 85K level. We've already been at the 92K level. So just so you have that in mind. So all these indicators are saying, look, we've had pain. There could be another 5% down on Bitcoin, another 5% down on ETH. If there is 5% down on Bitcoin and 5% down on ETH, it could hurt your altcoin bags quite a bit. And what they're saying is that we've in day 3, there could be another 5 or 6 days of this, which means that by Monday or Tuesday or Wednesday, this market will actually be on track if this follows the same corrective pattern. There is one indicator, though, that is worrying me a little bit more. And this is the indicator that may be telling me that this correction still isn't a proper correction. And I want to show you that indicator. Again, we've got to take all the information before we make a decision. So specifically, we've also got to look at this information, that the inflation numbers are actually looking better, because that's what started the correction. But let's look at all the factors and make a very, very, very good decision, right? So let's look at the fear and greed. Remember I said to you that the biggest thing about a correction for me is that I want to see a change in the fear and greed. Corrections are actually about a change of sentiment in the market from extreme fear to extreme greed, because that's how markets actually fluctuate, right? Now, let's look at previous corrections. This is the 2021 correction. And these, remember we said there was 5 or 6 corrections in 2021? Look at the fear and greed that happened in the 2021 corrections. The fear and greed went from 83 to 37, from 90 to 37, from 79 to 26. In every one of these, Bitcoin fear and greed dropped by about 50 points, right? So in every correction, the correction ended when Bitcoin dropped by when the fear and greed dropped by about 50 points. On the others, the same thing. Every time the correction happened with 50 points drop in fear and greed, right? You see it here, 82. So this is almost 55, 56. Here's another one, which was 40. Here's another one, which was 60. Here's another one, which was 50. In order for the froth or the exuberance to be taken out of the market, right, you need a correction in the fear and greed. Now, here is where we're not getting the correction that I actually want to do. So if you take this and you put in a crypto fear and greed, so let's say crypto fear and greed index, and we insert a crypto fear and greed index below, let it just calculate. Okay, now let's look at what the fear and greed has done in this market cycle correction. So the top of the fear and greed was over here at 94. And now the fear and greed is at 73, which means that we've only dropped by 21 points. That isn't a correction, right? And even if I look at others, for example, so let me just go to others just so you can see, because I showed you that others also dropped. You can say, okay, look, but Bitcoin has kind of been held up and everything else. Cool. Let's take the fear and greed, 95 to 72. Okay. So we haven't had a 40 or 50 point correction in the fear and greed, which we have had in every other bull market correction. And so when I look at the sentiment, when I think about the sentiment right now, and even if I look at the previous correction, so look at this correction that we had at the beginning of August. We dropped from 75 to 16. In fact, let's go look at it actually on the chart. So look at that. So if I look at this correction over here, we dropped from 75 all the way down to 16. That was a correction. This correction has dropped from 94 to 75. And that tells me that the market hasn't had enough time to be fearful. Now, let's go back to 2021, and let's go back to the same period in 2021, and let's go see what this correction felt like in 2021. For now, let's just call it the Christmas correction. So the Christmas correction in 2021 was here. Okay, so this is the Christmas correction of 2021. And that was it over, it looks tiny now, relative. But look at what happened to Fear and Greed. Fear and Greed went from 96 all the way down to 40. There was a 56 point correction in Fear and Greed. Now, we haven't had that. And that is the one indicator that's telling me that maybe this correction could get a little bit more brutal. Why? Because people just aren't scared. If you look at Twitter, corrections, people are, hey, I'm buying this, let's go to Valhalla, you got Justin Sun, hey, I just bought more, feeling good. That's not a behavior. That's not a behavior or a corrective behavior. Corrective behavior is when people are actually starting to doubt their positions, when people think it might be the end of meme coins. That is corrective behavior. This is not corrective behavior. People telling, let's buy this, big crash, one day after the dip. I want to see more tweets that say, the end of the cycle is near. Like this guy was the first guy I saw. He said, you've only followed me for 8 and 24 months. You've only known me as an outspoken bull. I've even called a perma bull. But he says, I can't ignore this. He's the first guy that I've seen that says, wait, maybe it's the end of the cycle. That's the kind of tweet that you want to see to know that you're at the end of the correction. And so the one indicator that is throwing me off here is the fact that people aren't fearful yet. In fact, the correction is a correction for ants. The dip in terms of fear and greed is for ants. Nothing has even happened yet. We haven't even gone out of green. We're not even out of we're out of extreme. We in greed. That is not a correction for me. And so of all the indicators, from a day's point of view, from an ETH point of view, from an altcoins dropping point of view, the market's told me that we've taken enough pain. But from a sentiment point of view, the market's telling me there's still some pain to go. And so, I mean, look, there are a lot of things that can actually save us right now, right? There's a lot of things. Like for one thing, the one thing that actually did save us was this thing here. This saved us. I mean, the fact that if we didn't get this tweet today, maybe we would have had another leg down, right? But there are a couple of other things that can save us. Number one, you have an options closeout next week. Big options closeout. If you go to Deribit and you look at the options closeout days, you'll notice the 27th of December is a big options closeout, right? One of the biggest options closeouts out there. And the max pain price for the options closeout on that week is something like 3,750. Then you got Saylor. So Saylor could actually come out with his tweet on Saturday and say and buy. In fact, he actually may be buying today, right? Because he buys on a Friday or Thursday and Friday, and he tells us on Monday, look, guys, I bought a whole lot of things. So Saylor may actually bid this market back up. Also, we haven't really hit alt season yet. I know for sure we haven't hit alt season yet. This is what an alt season looks like, right? This is what this alt season looks like. It's not. We haven't really hit the bull market. We haven't really hit alt season yet. So I kind of know that I'm in the long term, I'm extremely bullish. For the next couple of days, maybe I'm not as bullish as I should be for the next couple of days. And maybe I'll regret it. But I would rather, I've got to find you this tweet, because there's this tweet that really was very profound about the way it said it. Where is it? I don't have it. But there was a tweet that said something like, in a month or 2 months, you're going to regret. In a day or two, you may regret not selling it all, but in a month or two, you may regret not holding it all. Right? So that's the tweet that I saw, and I think that that's true. You got to zoom out here, and you've got to say to yourself, look, in 3 or 4 months, you're going to regret not buying. In 3 or 4 days, you may regret not selling. My feeling is, if I'm sitting down, I think you've missed the opportunity to sell. I think, to be honest, we've seen most of the downside. I'm not saying we've seen all the downside, but I think you're too late to sell. I think on Bitcoin, on ETH, you're too late to sell. You've missed the opportunity to sell. Should you be buying? Then if you've missed the opportunity to sell, should you be buying? So the answer for me, definitely start buying now. Remember I said to you, and everyone gave me slack, and everyone said, oh, you keep calling for correction. You've called the whole market wrong. Well, how many of you wish that you were holding 20 or 30% in cash now? Right? So, I mean, despite all the abuse that we get and whatever else, I'm going to stick to my guns, because I've seen this before. And my guns told me that I should have kept 30% in cash. Now, I had 20% last week. I deployed some. I bought more ETH options. I bought Athena. Thank heavens that those positions haven't hit me that. You see, I got lured into buying Pengu. I lost 56K, or I'm down 56K. I got lured into buying Popcat. Mistakes. The money that I deployed money into Athena. I now deployed money into ETH. The Athena position is still slightly down, but you can see it's now starting to recover pretty quickly, right? So right now, I think you've missed the opportunity to sell, which means that you should probably look to start DCAing. Now, how long should you DCA for? I'd probably DCA over the next 10 days. Over the next 10 days, I start deploying a whole lot of my cash. And to be honest, I try and be almost fully deployed because this market's going to recover fully quickly. So I want to be DCAing very, 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 very quickly out of my cash position now. And I don't mean in the next couple of hours. I mean 2% a day, 3% a day for the next 5 or 6 days, or maybe 10 days if you can wait that long. That is how you should be deploying the cash. That way, you'll still get some of the low prices, and you will protect yourself in case we get another leg down, which the charts told you that you could possibly get another leg down. So that is what I would be. That's what I would be doing. If you're fully invested, what do? You don't sell now because you've missed the opportunity to sell. If you're worried about your position, step away from your computer, go on vacation, and come back in 4 or 5 days. If you have money, you start DCAing now. Start DCAing for the next 5 to 10 days. Just DCA and deploy your entire bag because this is the correction that you've been waiting for. And if you're not deploying now, what are you waiting for? That is what I would be doing. Then the next question becomes, okay, what do you DCA into? What should you be buying? Now, there are a lot of things that you can be buying. Let me just walk you through this. One way to look at what you should be buying is to look at the fastest recovery tokens, right? And if I pop 𝗙𝗥𝗢𝗡𝗧, so pop it quickly, bang, 𝗙𝗙𝗡𝗧's gone. If you look at what the fastest recovery tokens are, it's quality. What are the fastest recovery tokens? Beam, Link, Tau. This is on the 1 hour. You can see that quality is recovering quicker than memes. So that is your sign to say maybe the market is telling you that the next part of the cycle is actually all about quality. But don't get fooled. When the market gets confidence, and that is after another 24 hours of a recovery, then all the degens are going to go back into memes. And so probably the best risk-adjusted trade is to DCA into a portfolio which also includes some memes. So one good strategy that you can use is you can say, look, what's the best L1 that I think is going to recover? Now, I said the best L1 for me right now, 𝗠𝗢. And so I bought some 𝗠𝗢 at about $4, right? I put it in another account, not in the one that you guys can see. And now it's at $4.17. Good trade. Okay. Then let's say from a meme coin point of view, pick a meme, any meme that you want, frog, popcat, just buy one meme. Cool. Next one. Let's look at one cross-chain protocol. What are the best cross-chain protocols? Your options are 𝗥𝗟𝗓, Layer 0, Rune. Pick one and just invest in one. I think probably for me, it would be 𝗥𝗟𝗓. It'll probably be Rune. Why? Because I know Rune recovers quickest. There we go. 505. Rune starting to recover, right? It was at $4.50. Now it's at $5.05. Just buy one derivatives exchange, one DEX. I'd buy Aerodrome. I'd even buy Radium. I think Radium at like $4 is probably a good one. Just buy yourself one token in every narrative that you actually like. Buy yourself 1 or 2 memes just so that you'll feel good when the memes actually recover, but they will recover. But ultimately, what you want to be doing is you want to be deploying your cash in the next 5 or 6 days. I'm not saying that the correction ends in the next 5 or 6 days. It could end in the next 24 hours. It could end in 10 days. But now is the time to be deploying the cash. This is why we had cash. We had cash so that we could deploy it into a correction. Now the correction's here. What are you going to do? Are you going to chicken out, or are you actually going to start deploying your cash? That is the decision that you have to make. I started deploying today. I deployed Curve, 𝗠𝗢, Rune, 𝗥𝗟𝗓. What else did I buy? Lido, Eigenlayer. Those are the things that I actually bought. I should be probably topping up my popcat position, but I'm not going to because my popcat position is very big. It's uncomfortably big. I don't need $500,000 of popcat, and you can see I'm holding $500,000 of popcat over here. So like it's not. I'm just going to try and recover the cash that I've got. I'm not going to try and do anything stupid. I'm going to wait for the market to actually go up. Cool. So that's what I would do. So again, to summarize it, this is normal. most of the indicators are telling us that the recovery is going to be swift. There's one indicator that's slightly worrying me, but you always got to weigh it out on the balance of probabilities. Either way, I think you should start DCAing in as soon as possible. You probably should have started at the beginning of the show because the market started to go up. Start DCAing into the market as quickly as possible. Know that there could carry on being a little bit more of a correction. And remember now that everyone's going away and the liquidity is gone. And so when you're in a position when everyone's on vacation and the liquidity is starting to disappear, then the market can have a lot of wicks. DCA, how do you DCA? Just pick one token in every category. One L1, I took SUI. One cross-chain protocol, I took Rune. One DEX, I'm going to take Aerodrome. Just take one of each one. One meme, take Frog, take Popcat, take WIF. Doesn't matter. Just take one of each token. That's all you need to do. Alrighty, with that, should we put on the red Christmas hat and make someone's day? Should we make someone's day? Okay, so how this works is you sign up for any of the exchanges below, and when we come back in January, I'll actually draw 5 names in January, right? Here we go. So we've got, it's quite a nice thumbnail there, Putcha, eh? Like no text in the thumbnail. Here we go. Okay, so how this works is you sign up for any one of these exchanges. Sign up for BitGet, you get $30,000 deposit bonus. Bybit, you get $50 for just signing up. Blowfin, no KYC. Anybody in the whole world can sign up. 𝗕𝗬𝗕𝗏 if you want to trade options. They put a lot of things here. They even put front runners waiting list. Front runners is closed. You cannot get in. All right, what is our box today, sir? Okay, box number 1. This is the winning box. I'm not going to open it yet. I'm going to put it right here. Box number 2. So let's first choose a winner. The winner of today is going to be this guy over here. It's number 977-297-9307 on BitGet. You don't get box number 2, but if you did get box number 2, you would get $1,000. Okay, so you're not getting box number 2. Box number 3 is, this is the box where there's something in it. What's in it? Ah, for God's sake. You see, they made mugs at the office that say, "Let me finish, Ron," right? And so you get a F1 mug that says, "Let me finish, Ron," because Michael Saylor kept calling me Ron. All right, so you don't get it. You don't get that. Box number 1 is the box that you do get. Let us see what is in box number 1. This is the one they got, right? $10,000. So if you are Blowfin account number 977-297-9307, you get yourself $10,000. You got to email us at giveaways@cryptobanter.com from the email address. Otherwise, you ain't going to get it from the email address that is registered to that Blowfin account number, and you will get the prize. You got to do it within 24 hours. All right, I'll see you guys again on Sunday. On Sunday, I'm doing a show which is the biggest trends of 2025. You're not going to want to miss that. Tomorrow, we're dropping the banter that we were supposed to drop today. I'll see you guys again then. Until then, trade well, my friends.